Now, in today's video, I'm dropping an absolute banger. I'm gonna be giving you my playbook on how to build your wealth, generate cash flow, generate revenue, put money in your pocket, leveraging credit so that you never go broke again. So you're not out here complaining about there being a recession, so that you always have some type of motion, right? So when you have motion, that means you have a flow of resources coming into you, whether that's cash flow, whether you have some assets, some real estate, some business ownership, stock ownership, whatever the case is, you have some motion, you have some leverage. I'm gonna explain a simple strategy on how you can build your wealth by acquiring cash flows, right? Over the past couple years, we've been dropping a lot of information on how to build your credit, what financial institutions to go to, how to fix your credit, how to get access to capital. So what's the point of all of that, right? You get the credit, now what? What is your next step? You got to deploy that capital. And that's been one of the biggest gaps I've noticed, especially in the credit space. A lot of information on what banks to go to, but very few people actually have a concrete plan on how to deploy that capital so that you can generate some cash flow. Because at the end of the day, the credit in it of itself is not the win. Yes, having access to capital is great, but you got to actually put it to work. You got to put the money to work. One of the best ways of doing that is through acquiring businesses. I'm gonna share with you how you can acquire a business and then get your money right back and then recycle that over and over. So you're acquiring multiple different cash flows and you're getting your capital back. Let's say you got 100,000, all right? $100,000. And this could be credit. This could be a credit card, line of credit, loan, or this could be your own cash. This could be money that you stacked up. Whatever the case is, it doesn't matter. Now, because we talk about credit, let's just assume that this is some credit that you borrowed, right? A $100,000 line of credit. So you took this 100,000, whether that's your own savings or whether that's credit, and you acquired a business. The traditional thing is when you acquire a business, it's usually several years before you recoup your investment. Let's say this business makes 20K per year net profit. Now, obviously, we want a business that generates more than 20,000. So that would mean it would take you about a 5-year repayment. So if you use the cash flow from the business, so the cash flow to $20,000 per year, it would take you about 5 years to recoup your initial 100,000, right? Y'all follow me, right? So what if I told you there's a better way of getting your money back a lot quicker, all right? So this is one thing that you can do. Most times when you're buying a business, it's going to be an asset sale, right? So that means you form a new LLC and you transfer the assets. There are some stock purchases, which that's a whole nother video, but with the stock purchase, the business is left intact, and this is generally through a C corporation, right? You acquire a C corporation, you acquire stock in that corporation as part of the business acquisition, and it basically leaves everything intact. But let's just say in this example, this is just a basic asset sale, right? So an asset sale, you're forming a new LLC, or you have an existing LLC, but it's a different LLC from the original company, right? So you have this new LLC, and then all that's pretty much happening is the assets are transferring, right? All right, so basically in this situation, because it's a new LLC, this new LLC, the business that you acquired that assumes the assets of the target acquisition, it takes a while before this business is able to take on additional debt, because it's basically, as far as the transactions, it's starting from scratch. So this is an important thing. So this is cash flowing from day one. So I'm just gonna put here instant cash flow. So this is the hack with existing businesses, right? The day that you take over that business, you have instant cash flow. This is the major advantage of existing businesses versus building a new unit franchise, right? I like doing the purchase of existing because you get instant cash flow. So you'll have to wait about, let's say, 6 months. So there needs to be some type of seasoning, right? 6 months seasoning of deposits. Now, I know a bank right now where you can get a line of credit. This is an actual line of credit. So most lines of credit, you need at least a year to 2 years as far as profit and loss statement, tax returns, and so forth. But I know a couple banks where you can actually get lines of credit, you can actually get working capital with 6 months of seasoning, meaning they look at your bank statements, and if they see 6 months of transactions, I know a bank specifically where they'll give you up to $100,000 with just 6 months of bank statements. So we acquired this business, and after 6 months, we're seasoned, so we have 6 months of bank statements. What we can then do is, with this 6 months of seasoning, what we're gonna do is we're gonna get a cash flow B-lock. And what I mean by cash flow B-lock is that this does not require tax returns. Because remember, with the traditional banks, if they're asking for 2 years of tax returns, even if you bought this existing business, because it's an asset sale, right? You're just acquiring the assets under this entity, this newly formed entity, or it could be a seasoned entity. But when the bank is saying 2 years of financials, they don't mean when it was formed. They mean 2 years of tax returns. So even if you acquire an existing business through an asset sale, you're still not going to qualify for traditional lines of credit. But you can get the fintechs, you can get the charge cards, and you can get the cash flow B-locks, right? Cash flow B-locks. So after that, let's say you get this 100,000, right? Because you got money coming in. So you got the 100,000. So look at this. You got $100,000, and this is assuming, let's say this business is generating enough revenue to justify the debt service, right? So you get 100,000. So look, now you put in 100,000 originally, and now under this new entity, you got approved for 100,000. So here's how you can get your money back quicker than 5 years, right? You could just pay yourself back, right? Boom. So now instead of 5 years, you pulled your money back out in 6 months. And that is a game changer, because now you're back to the same amount you started with. And now this new business that you acquired, the debt is on this business, right? So then you would just use the cash flow from the business to pay this off over time. So this is to repay. And I know this isn't organized in the best visual, but basically, to kind of summarize it, right? You start with 100K. This could be from your savings. This could be personal credit. This could be from another business, right? So however you have that 100,000, you acquire this existing cash flowing business and through an asset sale. So you're assuming the assets under this new entity. You're going to, and again, this new entity, since it's an existing business with customers, transactions, proof of concept, all that, it's instantly cash flowing. So from day one, you're generating bank deposits. So you do 6 months of seasoning, 6 months of seasoning with the business, and then you're going to qualify for cash flow B-locks. And let's say you get approved for 100,000. So then you just pull that back out, repay yourself what you used to acquire this existing business. So now that 100,000 is on the new business's balance sheet, right? As a liability, of course. And then, okay, so the new business has 100,000 in debt. Use the cash flow to pay this down over time. So now you recoup your initial. So now you got 100,000 back in 6 months. You have this cash flow in business. Yes, the debt is over there, but you're going to repay this over time with the cash flow from it. So now you could take this 100,000 that you got back, and then you can do another acquisition. I'm going to say acquisition number 2. So some of y'all might be thinking, well, now this business owes 100K, right? Who cares? Because it's already cash flow. You have control of it. And again, you're going to be building credit with repaying this anyways. And any interest that you might be paying is going to be tax deductible. This is basically like doing a balance transfer, right? So you have your original money or credit line, you buy the new business, it's generating instant cash flow, you let the bank deposit season, then you get a cash flow based B-lock, get the 100,000, repay yourself what you put into acquire it. So now the difference is you first start off with just 100,000 in liquid with no cash flow. Now you got 100,000 in liquid again. but you have an asset, a business that has instant cash flow. But yeah, you have debt over on this side, but you're using the cash flow from that business to pay this down over time. So now, not only do you have 100,000, but you also control a cash flowing business. And then with that 100,000 you paid yourself back out with, you can then go acquire another business. So this is a way for you to be able to build your wealth while generating cash flow. And the other thing, you could probably get more than 100,000. This is just that one lender, right? Let's say it takes you, I don't know, a couple years to pay this back, right? So by then, this business is going to be seasoned with, let's say 2 years. Let's say it takes you 18 months to pay this back. Now this business has 2 years of financials, 2 years of tax returns. Now you could even get to a point where you could refinance out of this higher interest, cash flow based BLOC and get a traditional commercial business line of credit with low interest rates. And as y'all know, the Fed just lowered interest rates. So variable rate business lines of credit are coming down, right? So again, just giving you guys real world examples on how you can apply the credit to actually come out ahead instead of accumulating all this credit with no plan, getting into debt and having no motion. So let me know your comments down below. Until next time, take it easy and we'll talk to you soon. Peace.